Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.Exchange. Nifty made a huge swing today. It was almost more than 200 point fall. From the day's low, it has shot up more than 200 point. And that was totally not expected. Forget about the Nifty. Look at the Bank Nifty. It fell 500, 600 point, then shot up 700, 800 point, then again fell 200 point. More than 1000 point swing has become a standard nowadays. But luckily, there was no injection story. Whether moving up or down, it moved gradually up and gradually down. There was no sudden move. But, many times the stop loss were jumping. The move was not very smooth actually. It was a very, very big swing today, and auto index and FMCG index have done well, whereas most other indices were struggling. Overall, on a close to close basis, it is a consolidation mode. For 5 consecutive trading sessions, Nifty closed between 23,500 and 23,600, just within 100 point. 5 consecutive trading sessions. But intraday volatility was so high. So therefore, this is just a consolidation and still it is a positive bias. Because most Asian markets were negative, so we started lower. Nifty gap down open more than 100 point. But at the end of the day, it closed in green, mainly because the European markets recovered. Even right now, US market also, the Dow as well as S&P 500 both are trading in green, while Nasdaq is slightly down. So, 23,600 seems to be a resistance. But remember my hammering story already. Too many times that resistance is being tested, so that become a weaker resistance and ultimately market is likely to break out. But when it is going to happen, that nobody knows. But right now, the Bank Nifty 52,000 and Nifty 23,600 seems to be a good resistance. Since we have only 3 more trading sessions for this expiry, we can expect this consolidation to continue unless there is some major news flow globally or locally. Today, surprisingly, both domestic institutions and foreign institutional investors, they were net sellers. So this institutional flow is slightly confusing for the last many weeks. In fact, this entire month. The FIIs also don't know whether to take a bullish view or bearish view. So therefore, on some days they are buying and some days they are selling, right? But the undercurrent is still positive. Otherwise, if the markets were to break down, today was the fantastic day. It could have broken down easily. But look at, 700, 800 point, recovery in Bank Nifty from the day's low. So, the undercurrent is still bullish and 23,600, is becoming a resistance, and that is becoming weaker resistance day by day, and sooner or later that is likely to be taken out. So, if that is taken out, I think another 300 to 400 point rally is possible. So, maybe, around budget time, if people perception about the budget is good, so we may go to 23,900, 24,000. So that's a real possibility. But the downside looks to be limited to 23,000. So in fact, that is what I've been saying. And even today in pre-market also I said 23,000 to 23,800 for this expiry. For this week expiry, and 23,000 to 24,000 may be up to the budget. But what is going to come out in budget, so that we don't know. So after the budget, what is going to happen, that more or less depends upon the budget outcome. So until that, So 23,000 to 24,000 seems to be the range. And if you can remember a few days before I said, 23,000 to 24,000 is the range. You can create strategies accordingly. And I also said, if you are an aggressive trader, you can take even 23,500 to 24,000 as the range to create some aggressive strategies. But you see aggressive strategies, then you may have to withstand a larger MTM losses. Right? So today, the recovery, the fantastic recovery from the intraday low shows that our markets are resilient. But at the same time, the India VIX has shot up more than 6%. So, the volatility is likely to continue to increase ahead of the budget. So just like, VIX went on moving higher, after the election results, the VIX crashed. So the same way now the VIX may start moving higher until the budget, and after the budget, VIX may crash. So that is my expectation. Looking at the open interest, the people have sold 23,400 call option heavily, and there was some unwinding in 23,600 call option, I think. So open interest indicate a positive outlook for our market. And moreover, for 5 consecutive trading sessions, we were consolidating. So either we have to break down or we have to break out. But breakdown, I thought for a moment today morning it's a breakdown, but there was a huge intraday recovery. So that shows that this market is not willing to break down. So breakout possibility is very, very high. So accordingly you can create some strategies. So anyway, the last week, only few more days, the time value is in favor. So option premiums are falling. So option writers are happy. But I would advise you to be cautious in July series because of the budget. So anyway, today I went for some YouTube video shooting. So that's why my post-market report is very late. And also I could not spend time to collect the data. So we will talk more tomorrow morning. Hope you enjoyed watching this video. Thank you for watching.